The newest trend graphics data reports for Redwood City are out. And in this video, I'm going to be doing a live reaction as I go through that data set coming up on this Bay Area Housing Market Minute. The Bay Area market, it's on fire. This is not front page news. And in today's video, we're going to figure out where Redwood City lies in all of that. I think I have a pretty good idea of what to expect, but this is the first time I'm looking at this data set. So I'm going to be doing this live reaction in real time with all of you so that you can see exactly what's going on in Redwood City. But before we get into the data and the numbers, if you're a home buyer in today's marketplace and you're looking for a comprehensive data set to assist you with your home buying decision making, you can text the word data plus the neighborhood or the city or the zip code that you're searching in, and we'll send that data straight to your inbox. And if you're a home seller in today's marketplace and you're looking for a data set to help make the decision for you or help you make a decision as to whether or not this is the right time to sell or what should you price your property at, all of those questions will be answered when you text the word data plus your property address to the number down below, and we'll get all that information sent straight to your inbox. All right, so let's jump into this data report right now. As you can see, this is for all residential homes in Redwood City, published in September. Interesting. Okay, so what you're looking at right now is active inventory, which is represented by the light green lines. Then you have the dark green lines, which is sold inventory. And then the pending sales are represented by the squiggly red line. What I'm seeing right now is what we've seen in other cities in not just the San Mateo County area, but all over the Bay Area, where the inventory levels and the demand are kind of coming closer together. Pending sales and inventory levels are kind of coming together. And this is not a huge increase in inventory or a sharp decrease in demand. I mean, we're only looking at perhaps a 7% drop off, 6% drop off in pending sales, and then maybe a 1% increase in inventory levels. But nevertheless, it's not negligible. And so these are trends that we should continue to monitor because, as you can see, for the last for the last 3 months in Redwood City, we've seen steady decreases in pending sales. Nothing to be alarmed at like in 1 month. But if we continue to see that month over month over month, then we might have a slight neutralization, a stabilization in the marketplace right now. Redwood City is still a white hot, I mean, not white hot, but it's definitely a hot seller's market. White hot, San Mateo. Medium hot, blue hot, if you will, that would be a Redwood City. And so again, this is why you tune into the Bay Area Housing Market Minute, because next month and the month after that, we'll see if this trend continues. We'll see if inventory levels continue to rise, because again, we've had 3 straight months where pendings have gone down and inventory levels have come up. The only thing to note, and if you've been watching any of my videos, you'll know that this is the case, but in the summer, we traditionally see this happen. So this is not out of the ordinary. This is not unusual. However, it's important to note that even though this isn't unusual, this is a very unusual time for us. We should expect the unexpected. And so let's continue to monitor this because we don't know how things are going to shake out in the fall of this year. All right, so coming over to sales price to list price ratio. This should not be surprising to any of us. I am looking at this right now, and 104% sales price to list price ratio. That's very strong. Clearly, we're in a seller's market. And for 1, 2, 3, 4, really the white hot seller's market, if you're looking at just the sales price to list price ratio, occurred in February through June of this year. Traditional spring market. It was very good to Redwood City. Now we're starting to see a tapering of the market. However, 104% is nothing to sneeze at. I mean, we're talking about all residential properties, not just single families, but condos, townhomes, duplexes, triplexes. That's a lot of different property types. And when you throw all of those into the mix and you're still getting well above 100% sales price to list price ratio, that is indicative of a very, very good seller's market. Again, days on market, 13 days. That's nothing. In other parts of the country, if you are doing less than 90 days, the market is incredible. So to only be a 13-day average, to only have a 13-day average days on market in Redwood City is indicative that the market still has a lot of room before we feel like, okay, it's steady. Because really an average of 30 plus days on market the market starts to feel a little bit more skewed in the buyer's favor. They have more time to look at the property. They have more time to kind of like figure out whether or not they want to buy it. In this kind of market, what you're seeing is buyers going in and having to make a decision literally day of or that week in order to figure out whether or not they want to put their hat in the ring and compete for the house. Back in, even in January of this year, you see we had 29 days on market average. And in February, 30, which really is indicative of all the homes that sold in February, which is really all the homes that went on the market late December, early January, which is generally the holidays. So it's not surprising to see that increase there in days on market. But look, we've got a huge runway now built in, a lot of buffer built into this marketplace. Yeah, and last thing I wanted to check out here was the absorption rate. Absorption rate measures how much of the active inventory is being absorbed by the marketplace or sold every single month. And anything above 33% is considered seller's market. So the fact that we're at 141% is indicative of a very, very strong seller's market. And this will continue to be the case because what this data is telling us is that we could have a drop off in demand of nearly 50% and still have it be a very strong seller's market. So that is nothing to sneeze at. Inventory levels could come up significantly. Demand could come down fairly significantly, and we'd still be doing very well in Redwood City. And so that should tell you everything if you're a buyer, because there are other cities around it like San Mateo, which are doing exceptionally well right now. And so, yes, that will eventually cause some buyers in the San Mateo area and other areas around it to say, hey, well, Redwood City, I can compete there because there's only 4 buyers at every house as opposed to San Mateo where there's 10. And so you'll start to see kind of like that migration effect that happens when other areas, other surrounding cities are outperforming Redwood City. And so you'll start to see buyers kind of flock in from other cities where it's carnage, and they'll go to where it's easier. So don't be surprised if the narrative switches here in Redwood City. Again, buyers that are looking at this, based on my intuition and also the facts, the data that I'm seeing, not just here, but all over the Bay Area, I don't see very many cities in the area where I would expect the market to stabilize or turn within the next 3 to 6 months. Almost all of them have enough buffer built in where we could see a slight increase in inventory, slight drop off in demand, and still have a really hot market. And so heading into the beginning of 2022, even the mid part of 2022, you could expect 6 to 9 months of sustained growth on your investment should you buy sooner rather than later. The only thing you're doing by buying later is putting yourself at a disadvantage, because eventually you're going to get priced out of what you're looking for right now. I've worked with too many buyers where that's been the case, where they come in and they're looking, hey, Dan, I'm looking at our $2 million, and eventually their $2 million budget gets them 10% less home and 1 less bedroom and a smaller lot and not as good schools, everything like it just, the market moves and their budget stays the same. And that's just the way things are in this market. So my suggestion is, if you're a buyer and you're looking at this data, this should at least bring comfort to you that there's enough buffer built into the system that, like, if you're considering making the move right now, that your investment is going to be safe for the time being, whether it be in Redwood City or another part of the San Mateo County or anywhere in the Bay Area. And of course, if you're looking for data outside of what is presented to you here, either in Redwood City or in other parts of the Bay Area, you can go ahead and text the word data plus the zip code or the neighborhood or the city that you're looking into the number down below, and we'll get all of that information sent straight to your inbox. And again, if you're a seller, at the very least, what this should tell you is that if your timeline is moving at a pace where you think it's going to be better for you to sell next year just based on your own timeline, there is enough evidence here for me to predict that your investment's going to be secure moving into the early part of next year, like February, March timeframe. So if you're thinking that's going to work better for your schedule than putting it on the market in the fall, then I give you my blessing. This is Danny Gould, everyone, selling Silicon Valley. Catch all of you in the next video.